Welcome back, traders. Happy to have you here today. In this short video, I will show you how to build a powerful trading strategy with the Interactive Motive Wave Checklist indicator to detect trade opportunities in the market. The Interactive Motive Wave Checklist indicator is a tool that can be used for learning a bit about Elliott waves. The script upon load asks users to enter 6 pivots in an order. Once all 6 pivots are selected on the interactive chart, the script will calculate if the structure is a valid motive wave. When you load the script, you will see a prompt on the chart to select points on the chart to form 6 pivots. When you select the 6 pivots, the checklists are populated on the chart to notify users which conditions for qualifying the selection have passed and which of them failed. To apply this indicator on the trading chart, search the keyword Interactive Motive Wave Checklist and select the Interactive Motive Wave Checklist EP by Trendoscope on the TradingView Indicator Community folder. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight indicators and their purpose so you can have a quick understanding of how the indicator works. To do this, we need to right-click on the indicator. Here are the parameter settings of the indicator. It's advisable to leave the default settings. Under the input settings, there are the XABC waves. The wave counts from 0 to 5. Each wave will pinpoint its corresponding price value on the price chart. Under the style, there is the labels. The labels will plot figures starting from 1 to 5. There is the lines. The lines will plot the wavelengths on the price chart. Next is the tables. This will show the signal information on the Interactive Motive Wave Checklist indicator. You can't use this indicator without having the tables box checked. How does the Interactive Motive Wave Checklist indicator work in the market? The working concept of this trading indicator is based on impulse or diagonal wave movement. Diagonal waves can be either expanding or contracting diagonals. To learn more about diagonal waves, let's study this chart. As we can see, here is the diagonal wave at the top as the head. The diagonal wave has 2 branches, which are contracting type and expanding type. The contracting type will constitute either a rising wedge or a falling wedge of contracting type. The contracting type has 2 branches, which are leading diagonal and ending diagonal. The leading diagonal will only show the contracting type that can be a leading diagonal. Whenever the contracting type and the leading diagonal signal are formed, it suggests a short-term pullback possibilities look, while the expanding type has only the ending diagonal. The expanding type constitutes either a rising wedge or a falling wedge of expanding type. The ending diagonal will show both contracting and expanding types that can be ending diagonal. The expanding type, which leads to the ending diagonal, signals long-term reversal possibilities look. As you can see, there is a strong bias about chart patterns and their interpretation in the technical analysis space. We need to understand that diagonal waves of contracting types are the same as that of contracting wedge patterns. And the diagonal waves of expanding types represent expanding wedge chart patterns. Diagonal waves can appear as subwaves in multiple parts of the entire Elliott wave. How can we make the best use of this indicator to avoid trading fake buy and sell signals? For the leading diagonals, these are diagonal waves that can appear towards the start of a trend. This can be wave 1 of an impulse wave. This is the start of a new trend. Avoid trading these wedges as they can be short pullbacks, or better look for pullback and trading opportunities in the direction of the wedge. Wave A of a zigzag wave. This can lead to a possible bull trap or bear trap. The corrective wave is likely to continue after a small pullback. For the ending diagonals, we need to understand that both expanding and contracting types can be ending diagonals. This can appear as wave 5 of an impulse wave, meaning the trend is coming towards possible exhaustion. Wave C of zigzag or flat. Correction or pullback is coming to an end and the trend is likely to continue. It's time I show you how to execute buy and sell trades with this technical indicator. First, let me show you how to use this indicator to buy and sell in the market. To buy with this technical indicator, ensure to see that the pivots and directions in order are marked in green or to see that an expanding diagonal wave is formed for a long-term bullish movement. Next, ensure to see that at least the impulsive wave checklist waves 4, 1, 3, and 5 are all extended and marked in green check. Once you figure out this formation on the price chart, then you can anticipate a buy entry. For a trending bullish market, close the buy entry whenever wave 5 closes below wave point 3 on the price chart. For the reversal of a bearish trend to a bullish trend anticipation, close the buy entry whenever wave 5 closes below wave point 4 on the price chart. Alternatively, if a contracting diagonal wave is formed on the price chart, this will suggest the trend is about to come to an end. And be careful of buying the bullish swing from point 4 in the uptrend. A bearish price swing below wave 4 would signal the end of the bull trend. The same formation also goes for the continuation of a downtrend. For a trending bearish market, close the sell entry whenever wave 5 closes above wave point 3 on the price chart. For the anticipation of the reversal of a bullish trend to a bearish trend, close the sell entry whenever wave 5 closes above wave point 4 on the price chart. Alternatively, if a red contracting diagonal wave is formed on the price chart, this will suggest the trend is about to come to an end. And be careful of selling the bearish swing from point 4 in the downtrend. If it is an impulse wave, then it suggests a strong bearish move. A bullish price swing above wave 4 would signal the end of the bear trend. Take profit 1 should be the 2 times value from the sell entry point to the stop loss level from the swing of invalidation of the wave formation. Traders can target the next potential support level in the downtrend as their take the profit 2 zone.